Stock market today analysis for October 28th, 2022. The Nasdaq is up 2.87%. S&P 500 up 2.46%. U.S. Treasury 10-year yield up 9 basis points. Gold down 1.06. Bitcoin up 0.42%, and oil down 1.02%. We had a lot of big tech stocks report earnings this week, and going into next week, I don't see any more, at least big tech stocks standing out here to me. I guess we got some semiconductor, two semiconductors on Monday, but they're definitely not in the FANG category. I think maybe we got all the FANG stocks behind us. AMD, another tech stock. I don't know if they consider Uber a technology company. If so, I guess I should be a technology company also for making a YouTube video. And so pay attention to when the stocks you trade are reporting. There's a couple different ways you can, depending on what type of trading. If you're just straight up investing, you're just going to ride it out, right? But if you're doing certain types of trades, then you might want to be in or out depending on your trading style for that time. One thing that can happen is as you go into earnings, the premium for options can get much richer. So maybe if you want to sell a put option further away from the money, and then maybe you will possibly get filled if it drops like a meta drop, or if it goes up like Intel and maybe just expires worthless. But paper trade it so that way you can find out and figure out what's best for you. The VIX down 5.99%. Boom, look at a big drop. So in the last 5 days we're up close to look at this, over 30 this month, and it just really went down. MMRI coming down a little bit, but bumping up a little bit today. This indicator is still relatively new, maybe like 2 years old. So the way that I'm looking at it is it's in high risk. So if it comes down a little bit, it's still in high risk. We're not down in green, we're not down in yellow. And we'll talk a little more about that divergence. All the bond rates went up just a little bit, but they all put on some positive gains. How about the stock market? S&P 500 had a strong day to the upside. The last 2 days it was battling that 50-day moving average, and it overtook that 50-day moving average, closed on the upper side of it. Money is starting to kind of flow in enough that it can't be read anymore, and a good amount of volume. Technology sector, same thing, except for we're just closed a tad bit above that 50-day moving average. Same thing on that Pro 2, decent amount of volume. Get ready for this, healthcare. Boom, look at that. Now healthcare, we're above all 3 moving averages with a strong bullish candle engulfing this candle and taking out Wednesday's trading range, not just the body. But we look over here, looking to the left, we want to see it break above this point right here. Let's see. Looks like in the last year, its high has been around 140, 142. So if we see it break, like we see it start closing around 143.50, somewhere in there, it's probably going to start basing out there. Then looking to the left, right, this is that's in the last year worth of trading, that's the highest high. But we see some over here, this would be the next high it needs to take out, which it's pretty close. It's a good chance it's going to take that out. But this has been the most bullish sector of the S&P 500 for a while, and it continues to be. Volume on par with yesterday, but kind of light. The last 2 days have been a little bit light. So moved up on some light volume. Lighter volume, not that light. Financials. Financials had a nice bull run today too. Volume not making that the average daily volume, even though you see that lines dip down because of this. But you know, looking to the left here, it's kind of in par. It doesn't seem extremely light. And we're moving up towards that 200-day moving average. Got enough money flowing in there that turned green on the Pro 2. So for bullish reasons, that's good. Consumer discretionary, bull candle also. However, it did gap down on the open. And even though it's a strong bull candle, look at that. It just basically closing, just kind of went sideways for the last couple days. But here we are, you know, gap down below the 25-day moving average. Consumer discretionary. Well, you got things like Starbucks, Disney. What else is in there? Anything that I'm noticing? Amazon. You know, it's kind of like retail stocks, things that people don't necessarily have to buy. And you know, there's a lot of conflicting data out there. You know, some people in the media saying everything's great, some people in the media saying inflation, there's still inflation. I would say, instead of listening to people in the media, listen to yourself, your family, your friends, people that you trust, and they don't really have an agenda to sway you. And overall, the prices of things that you commonly buy in your life, and you've been buying for, you know, last X amount of years, have they gone up? Have they came down if they went up? Have they got less expensive? Where is it at? And that should give you an indication of where inflation is in your particular consumer discretionary stuff. So maybe that's why we're seeing some weak things. But for the most part, the stock market is a bit detached from the real economy. So who knows? Industrials. Boom, shot up to that 200-day moving average, but closed a little bit below it. Still yellow over here on the Pro 2. Yeah, we've had this decent amount of volume. IWM, same thing. Okay, volume, we got strong volume in there, and we got a strong bull candle with a little bit of wick there. So that tells us that even though it opened here, it traded down a little bit lower. Still yellow over here. But a lot of selling came in, but didn't really move the price much. Qs, look at that. Oh, that's so funny. So, hey, where'd you go? Such BS. All right, let's double check this. All right, okay, so that was just that apparently was a little glitch in the software. This is our real candle here. Okay, strong candle, right? Opened up right on that 50-day, or excuse me, 25-day moving average and just powered up. Price stayed up, and what happened? Price stayed, yeah, up on the top end of the candle pretty much all day. Dollar. Look at that. Little doji action there. And this doji, you can see that the open and close almost exactly in the same spot, but it's lower to its trading range. Right? It went up higher than it traded lower, and selling brought it down. It's barely sitting on top of that 50-day moving average with some really light volume. Bonds kind of moving sideways, so we hit a little temporary bottom here, or a permanent bottom, we'll see. Turned to yellow, so we got money has started to slow down on flowing out, but not really flowing in to turn green. And kind of weak volume, but we got that selling volume. Almost touching the top of this channel, right? That's what we want to see. That's great. I was at the beginning of the week, I was really thinking we were gonna touch this channel. So we're a little bit off from that, but it's still moving up. To some degree, the earnings have been helping, but you know, yesterday we looked at Facebook dropping, Google dropping on earnings. And earnings really haven't been that strong. And what else do we see? We see bonds going up. Generally, when bonds go up, then stocks usually go down. And we see we're still in here in a high risk, but the VIX has come down quite a bit. So I'm thinking that the rumors going around that the Fed is going to slow down on rate increases and potentially kick in some sort of program to stimulate things. I think that that's what's goosing things more than anything. I've heard one person say that the Fed has already pivoted, soft pivot. They haven't made this formal announcement, but in essence, that's what they've been doing. And based on what we see here in stock prices, maybe that's what the market is believing. So prediction for going forward, I think we're going to test this channel. I think it's possible we're going to break out of this channel. I think it's possible we might even stay out of this channel for a little while. And after midterm elections, we want to see what happens then. After midterm elections, after this earnings season, if it's still able to remain outside of this channel, then I will be more of the mindset of thinking that we are either basing to go higher, or we're just going to start going higher. But you know, there's a lot of negative news in the air. There's a lot of negative news. There's a war going on. There's rumors of nuclear war. Those are some pretty bad things. So you know, if the stock market is not detached from the economy? If it was connected, then what's so great? What's so great when you have rumors of war, rumors of nuclear war? Excuse me. There's real war going on and rumors of nuclear war. What is there to be hyped up about that? To have the economy shoot up, unless you're a warmonger and all your business revolves around bloodshed and killing. So to me, that's an indication that the stock market is, if it's not 100% detached, it's partially It's somehow it has more detachment from the real economy, and that's why you could just trade. So let's take a look at what happened with oil. Oil had a bit of a closing the week with a bit of a downward day today, and closing the whole week with what type of candle? Okay, but down on the day, up on the week. And so what do we see? Kind of built a base down here, and now we got a low, we got a higher low, and a tiny little higher low. And so it looks like prices are seems like it's kind of forming a wedge on the weekly, where it's coming up from the bottom, but sort of staying parallel here and pressing up. How about we take a look at GOLD? GOLD. Boom! Look at that. What a sell-off today. So holding this support area here. It's still above that. Not even. I mean, obviously closer than up here, but up here barely touched that 1640 area, and some buying pressure put it up here. Overall, we're in a downward trend still in gold, but it seems to be kind of basing right in there. And hey, here's some exciting news for Bitcoin. Bitcoin, we've got broke out on this day. 1, 2, 3. This is the fourth candle that it's still staying above 20,000. The more it stays above here, above this 20,000, then the greater chance we have to going to the upside. Seemed like it started to look iffy right in here. Broke out here, opened here the next candle, traded all the way up here, closed here, and the very next candle opened basically where it closed and dropped, closed where it opened. So it just went sideways. And now our third candle over here in the bottom 50%, basically, maybe a little over 50%, but it's in the bottom half-ish of this down candle here. And with this candle, it's still having a tough time. Breaking past this, but it's holding over the 20,000 at the moment. So it'll be interesting to see what happens over the weekend. And yeah, if you're a Bitcoin bull, then that is a good sign. If you're a Bitcoin bear, every day that it stays on the opposite side, on the top side of 20,000, it's looking not as good for the bulls. So we got a bit of a dichotomy going on. We have VIX going down, so fear in the market's going down. But is fear in society going down? When I look around where I live, I don't know. I don't know. I have no idea. Per this risk indicator, we're still in the high level of risk. Bonds moving up, maybe not up as much, but moving up. Stock market's moving up. So we'll have to see what happens after the midterm elections. And depending on how your life is set up, should dictate what type of actions you're taking right now. The way that my life is set up, none of this is really bothering me. I'm pretty much doing the same thing that I would normally do, other than, yeah, I mean, I'm doing the same thing I would normally do. So what do I normally do? I normally sell cash secured, put options on stocks that I wouldn't mind owning the rest of my life. and then if I get assigned on them, I start selling covered calls. If the covered calls expire worthless, I sell more covered calls and hold it, if I have to or choose to, hold it as long as I feel like it, collecting dividends and getting premium, reducing my cost basis while it's bringing in cash flow. And if I get cashed out, no problem. If I don't get cashed out, no problem. So that strategy for me is like Brent wins no matter what, because I like these stocks. I think they have qualities about them, either fundamentally or in the big macro sense of the world, or sometimes they've got maybe they don't have the best fundamentals of the company, but in the macro sense of the world, and maybe there's something unique about that particular stock. So I'm doing that. At this moment, I was talking about yesterday where I bought a put option on a stock, but I bought it a little too far out of the money. So when it dropped, it didn't drop far enough to really be a meaningful profit for me. And I kept it a little longer to see if the stock was going to drop longer, but it didn't. It started rallying up to the top. So what I did is I adjusted it into a spread. So I had already bought a put, then I started selling. I sold a put and turned it into a spread. And the put that I bought has a longer time duration than the put that I sold. So I'm thinking I'm trying to give myself some chance in case it's going to come up here and just fail and crash back down. Give myself a chance to have that long put get into the profit zone. If not, I'm at least minimizing my loss on it by selling put options against it, and it's actually on a stock that I don't mind owning anyways. So that's probably the most complex kind of iffy position I have. Other than that, I haven't really been looking for any particular directional trade, at the moment. So that is what I do all year round. That is what I do all year round. Sell cash secured puts, look for directional trades if they line up really nicely. If not, sell a lot of cash secured puts. And you should figure out whatever you need to do, whatever works well for you. How would you do that? You paper trade. You take whatever information that you're learning and you try to put it into action. See if what you're thinking in theory matches up with reality. Yeah, I get it. There's some things with paper trading, like maybe you get filled a little easier. But you know what? It's better than not doing it. If you don't paper trade, then you're stuck with only your opinions. Did you ever meet someone that never had a job and they had all these opinions on everything? They're so opinionated. They think they're so right, but it's like they never had a job or they can't hold a job. So it's like this person doesn't understand that the world will reward accurate opinions or punish inaccurate opinions. And if you can't hold a job, then obviously you got some opinions that are not accurate. Otherwise, you'd be rewarded. So what you need to do, instead of just philosophizing about the stock market, theorizing about the stock market, you need to take your theories and your philosophies and you need to test them against something somewhat real. And I'll tell you what, paper trading is pretty darn real. If you don't think it's real, then you're basically saying that if you wanted to learn to be a boxer, you see no value in sparring. That the only way for you to learn how to be a boxer is to get into real boxing matches. That's it. Someone from another boxing gym. Someone that really wants to knock the teeth out of your mouth or knock you unconscious. That's the only way that you can learn. You cannot improve by having a sparring session with someone that does not want to knock you unconscious. And why do I say that, knock you unconscious? Because when you're trading in the stock market, who are you trading against? Do you really know who it is? No, you don't know. Do you think that person, whoever is on the other side of your trade, do you think they want your money? Or do you really think that they're sitting there and they don't know who you are and you don't know who they are, and they're just like, well, it might be Johnny over somewhere who maybe needs this money. Give me a break. If you really think that, you need to slap yourself in the face and wake up to the real world. No one in the stock market cares about you. They only care about themselves. They will take your money. That's what they're there to do. They're there to take your money, and you're there to take their money. So get out. If you're in this delusion that paper trading has no value, then you need to get out of that delusion. And before you lose your money, test your opinions, test your theories, make sure they're accurate. If you're losing money in paper trading, then you'd be losing money if you were trading real money. It'd only be real worse. So in order to help you do that, if you're new to this stuff, I suggest one of the first things you learn how to do is sell cash secured put options on a stock that you wouldn't mind owning the rest of your life if you had to. Go to iofsuccess.com, at the minimum, download this cash secured put stock selection guide. At the minimum, but download everything. Read through it, take what you can take out of it. If it has no value to you, just take what you can take out of it. With this, you'll have an idea of how to select stocks that would be good to sell cash secured put options on. And then you're in a position, put yourself in a position that no matter what happens, you win. I mean, how much better could it be than that? No matter what happens, you win. Would you rather be in a position that you lose or that you have the potential to lose? Well, let me think. I have the potential to win no matter what happens, or I have the potential to win or lose depending on what happens. Choice is definitely up to you. You can probably tell what I like doing. That doesn't mean that that's all you have to do. But if you're a beginner, start with that. Put yourself in a position so you can just rack up the successes. And then from there, once you start understanding how things go a little more, then do some trades that maybe take a little more risk. Maybe at the end of the trade, then you're in a position that you're either going to make money, lose money, possibly break even. But a lot of times it's the break even seems to be a real savior if it comes through. But usually what I've noticed from trading and other people, it's either you make money or you lose. Make money or lose money, generally speaking. Like if you break even, it's almost like you made money. It's a big success if you went from losing money or almost lost money. So give that a try. Download this stuff. And hey, it's exciting. You know what? The stock market's not going away. It just keeps getting better and better and better. It's getting more dynamic and more dynamic. So the longer you wait to start learning and getting in the groove of it, the more behind you will be. Check out this mission page if you want to know a little background about me and how I came into trading. And when you download any of these, I send you stock market related stuff 6 days a week. And I'm happy to say I'm working on something. I don't know exactly when it's going to be done, but I'm working on something. I'm really happy about it. And what I'm also really happy about is going into next week to see what happens in the stock market, because I love it. You guys have a fantastic weekend. Bye-bye.